Hello, this is Jordan, and this is your Precious Metals video market update. This video is being recorded on the evening of Monday, February 20th, 2017. And in this video, I am going to discuss what could be the start of a correction in the gold stocks. And let's get things started off looking at a daily candle chart of both GDXJ, which is on the top, and GDX, which is on the bottom. And we include the 50-day moving averages. These are the daily candle charts. And what we've seen over the last 7 or 8 trading days, until Friday, it looked like a bullish consolidation where the miners were holding the recent strong gains by not giving much of them back. They were digesting the gains in really strong fashion, and the lows of this recent 7 to 8 day consolidation, they were the lows that had been held were the 38% retracement from the very end of January. So if you look at the strong move, I believe from 36 or 37 in GDXJ up to about 43, the 38% retracement of that was the low about 2 or 3 days into the correction. And same thing for GDX, although GDX a couple days ago, 3 trading days ago, did make a new low. But until that point, the lows for the miners, it was the 38% retracement of the recent move. And so that had been holding up really well. And until Friday, when we got a bearish reversal, the miners were down about 2%. They closed at the low of the day, so it's a full distribution type candle. And just considering the fact that GDXJ basically rallied 50% in less than 2 months, and GDX rallied about 37% in less than 2 months. Considering that and the area of strong resistance, GDXJ, that area 41, 42, and then GDX 25, 26, we had been talking about these targets since the end of December, and we talked about them multiple times in editorials, a few times in videos. So, in other words, when a market has had a really big move, it's somewhat overbought, and it gets up to really strong resistance, the odds are it's probably going to have a correction. It's probably going to have a pullback. Now, until Friday, as I said, it looked like we were having a bullish consolidation, and that's still possible. But after Friday, I'm more on the side of we're probably going to see at least a 10% correction here. And now, to negate that, what we really would need to see would be a daily close in the miners above the highs from last Thursday and Friday. I mean, that's the clear immediate resistance if we start to see some strength in the next couple trading days. But otherwise, if we're looking at support, GDX has a confluence of key support right around 2250. I mean, there's numerous things that point to 2250. And right now, the 50-day moving average is actually at 2248 and rising. But the 50-day moving average, I mean, that could end up hitting 23 by the time GDX gets there. But a 10% decline in GDX from 2479 would be in the low 22s, but around 2250. Or you could even test 22. And there is the potential that there could be a head and shoulders bottom developing specifically in GDX, but I don't really know. I don't think it's that strong of a head and shoulders pattern, but I just wanted to point it out because I'm sure other people will point it out. But I mean, it makes sense that we had this big move, this big rally. Now we're at resistance, and now the miners we're going to see they'll correct somewhat. We'll see, where the buyers will start to regain control. My guess would be, I already said for GDX around 22. For GDXJ, that would be perhaps at 37, perhaps at 36. The 50-day moving average is at 35.72. And just go back to the 50-day moving average, and you can see that in September, it was resistance for both GDXJ and GDX. It was clearly resistance twice in September, then again in November, where it was tested and held, and then again right after the Trump election, I believe the day after. So it held again, and the recent rebound shot up way above the 50-day moving average. And so now that we could be in correction mode, as far as a short-term trend, we want to focus on the 50-day moving average. So for GDXJ, as I said, 36 or 37 could be the correction target, and the 50-day is at 35.72 and rising. So that's where the evidence for me, it argues that we're probably going to see at least a 10% pullback here in the next several weeks. So this could be a correction that lasts more than just a couple weeks. And the hot inflation number came in, and I did have a chart saved, but I couldn't find it. And so the odds of a March hike went from very low to like 45% already. So if we get some more hot data, then the market could start to price in a rate hike in March. And so that could coincide with this correction. And look, the last two times the Fed hiked rates, those were pretty damn good times to be a buyer of gold stocks. So on a much smaller level, we could see the same thing again a month from now in March if they do hike. Big picture, let's get back to the weekly look. And we can see GDX, its rally, the real strong resistance dating back to 2013 is around 26, basically, 26 and a half. I think this rally in GDX peaked just below 26, a little bit above 25.50. I mean, there's some resistance there, but the rally did not reach the stronger resistance, as I already noted. Now, GDXJ relative to GDX is trading, I believe, close to a 3 or 4 year high. So we're seeing significant relative strength in the juniors relative to the seniors, and the seniors relative to gold have been showing a lot of strength. So that just tells you how strong GDXJ has been. But this rebound made it up to that really strong resistance dating back to 2013, which is around 42, 43. And so that's really a weekly close above that would be key, because if we see a weekly close above that, or two consecutive weekly closes above 42, then GDXJ would have very limited resistance until 48, and really strong resistance at 50. But we'll see. I mean, if we get a correction or consolidation here that lasts a few months, but it doesn't correct that much. And so in other words, it's more of a correction in terms of time than price. That would be very bullish. That would set us up for a break above their resistance and probably a retest of the highs as far as the upside move that would come after the correction. But again, I'm getting ahead of myself. Now, if we get some massive dollar rally here and the market corrects a lot more than we would expect, then look for a test of the 80-week moving averages, which are at nearly 21 for GDX and about 31 for GDXJ. So that's something to keep in mind if this correction goes a lot further. But look, I mean, we don't even know if a correction's just started. So as I said, I'm getting a little ahead of myself, but these are just some things to keep in mind as time goes on, and if this correction develops or not. Now, getting into the metals have been showing more strength in the past few days than the miners, but they've lagged recently. And so, I mean, if you look GDX rallied up to the Trump. Let me go back for a second. As you can see, those highs in November, GDXJ rallied above the November high, whereas GDX rallied basically right at the November high. I call it the Trump resistance. Now let's go back to where we are, and you can see, look where that November high is for gold. I mean, it's like at 1310, and for silver, it's at 1850, 1875. So, I mean, gold is well below that. at 1239. So that just shows you the relative strength in the miners, that the rally that they've had, they've really already been pricing in gold above 1250, in my opinion. Now, this is a daily chart that we have here. Gold has strong resistance at 1250, so if we get some kind of bearish candle in gold over the next day or two, that would tell me it's gonna test 1220 again. I would just continue to take my cues from the miners because they're clearly leading. Now, silver is up 8 weeks in a row. It's right at 18 right now. It does have resistance, strong resistance at 1850 to 1875. So we'll see. I mean, if maybe the miners just correct a little bit here and we see the metals grind higher to these targets before the bigger correction that we're expecting plays out. I mean, that's something to keep in mind. It's just if the metals go higher in the short term and the miners correct, that would just not be a good sign for me, because that would say the miners are right. I'd prefer that the metals don't go much higher here if the miners are going to consolidate and correct. I prefer that would happen together, because as we know, the miners lead, and when the miners are weak and the metals are going higher, it's never a good sign. Anyway, a lot to take in this short-term update. So, I could be wrong, but it looks to me like we're probably going to see the miners correct here, at least 10% over the next, could be the next month, could be the next couple weeks, or, could take even longer than that. So I would be on the sidelines waiting for lower prices before I become a buyer again. Anyway, you can follow all my work at thedailygold.com. You can opt in for free there. You get my free newsletter, my weekly update, which is sent out every Sunday, which includes my most recent thoughts on the sector and some snippets from my premium update the day before. Thank you again for listening and watching to this video. I really appreciate it, and I look forward to publishing another video update for you in the next week or two. Thanks.